Welcome back. The market's giving us a shade of green, and this feeling, this spirit is being led by the FMCG space, especially after Asian Paints numbers yesterday. So are the FMCG stocks giving us the first signs of hope? For that question, Abneesh Roy of Edelweiss Securities joins us on the phone line. Abneesh, good morning. Well, we had actually a couple of good numbers, Dabur as well as Asian Paints giving us above expectation numbers. Do you think that the worst is over, and would you change your numbers for FMCG companies in second, third quarter?
So I think most of the consumer companies which have come out with results have given in line or better. So even Hindustan Unilever, although volume growth was in line, in terms of EBITDA and PAT growth was decent. So in terms of demand, I would not expect a recovery for the entire space, at least in second quarter. It will be status quo. But in the second half, we could start seeing green shoots of recovery, especially in the rural. But from a pricing power and in terms of margins, we have clearly seen there are enough tools and levers for FMCG companies in terms of cutting ad spends, in terms of taking price hikes. Raw material is pretty benign.
Oops, actually we can't hear you very well, Abneesh.
Demand,
go ahead.
Yeah, but demand recovery will take one more quarter at least.
Okay, demand recovery will take one more quarter. I was just going through your note on Asian Paints that you came out with, where you still talk about the slowdown worries. So in the very near term, your target price is 16.49. You have a buy on the stock. Is it only Asian Paints that you have a buy on, or do you think that, you know, after good numbers, maybe something like a Kansai, a Berger Paints can also be bought?
I think it's clearly a gain of market share by Asian Paints which is working out. We would entire paint industry to be growing in 16% kind of volume growth. Asian Paints clearly is doing the right way in terms of giving more sales incentive to the dealers especially. So we have a buy on Asian Paints and Berger. We will be expecting these two players to gain market share from the number 3 and number 4 players and rest of the local players. Especially the GST rate cut from 28 to 18% has led to market share gains from the putty and distemper, which is at the lower end. So which will continue definitely in the coming quarters also. So we have a buy on Asian Paints and Berger.
Okay. I finally wanted to ask you, in the FMCG space, that is the Dabur, Emami, HUL list, where are you seeing value? I mean, the problem with these stocks, besides performance or worries of performance, was price.
Yeah, I think still in Dabur, value is there. So it was a significant beat on volume growth. There is again ability for Dabur to gain market share from some of the herbal players which are not doing well, especially in Dabur is expanding the rural distribution. So I would say in Dabur, we have a comfort in terms of valuation, and the rural is also 45% for them in the urban, in the Indian segment. So that one name which is looking definitely good at current valuation.
Okay, Abneesh, we'll leave it at that. Thanks so much for joining us. So that's the word coming in from Edelweiss on a whole host of FMCG stocks that they like. But, well, for the market as well, it's looking pretty good, but just coming off a little bit from the high point now.
Not in the
Canara Bank is down almost 3% at the moment.
Canara Bank was not in the green at all. But among the indices, yeah, I agree, there's a little bit of trimming, but the bank index itself is doing reasonably well. And I think it's it had gone up to 0.8, now at 0.75. So that one is quite clearly shoring up the rest of the market. Financials today, toast to the financials, especially to the banks. So on that note, let's get to one which is not partying. The Syndicate Bank, elevated slippages and therefore higher provisioning, what you call higher credit cost, led to a huge net loss for this bank in the first quarter. Mrityunjay Mahopatra, Managing Director and CEO of Syndicate Bank, joins us now. Thank you very much, Mr. Mahopatra. Could you give the movement of NPA in terms of slippages, recovery, upgrades, write-offs, etc. for the quarter? Is there any large slippage?
In the first quarter, what we see is large slippages in the form of accounts of ADA Group, and that was about the large slippage. that we have seen. Others are small slippages. The NPAs during the quarter has marginally increased because of the special dispensation that was available for the MSME sector that delayed recognition of NPAs that was withdrawn. So we saw some additional slippages in the MSME sector. And however, on a actual number basis, I think there was a reduction in NPA from 2003. There was an reduction in NPA of 800 crores overall in cash recovery and upgrades, and total put together, we are going as per the guidance that is given to the streets.
So, Mr. Mohapatra, what was the total slippages and how much of it came from, say, stressed groups like the ADAG group?
There was a gross slippage of 2,344 crores, out of which around 410 crores came from ADAG group.
Okay. Now, what is your watch list, or I mean, if you want to say, what is your list of stressed assets from which we may expect NPAs?
There is, technically these two NBFCs that are DHFL and Religare Finvest. These are in our watch list. They have not turned into NPA, but we are keeping them under watch list.
Okay. What is the quantum of exposure to these two entities?
In both these put together, the exposure will be around 2,000 crores.
Okay, can you tell us about margins? What was the net interest margin in Q1? And it looks like you had a lot of pressure on the cost of funds sequentially as well. Is that expected to continue?
Sequentially, yes, there is a little bit of pressure. It is the NIM, domestic NIM has come down from 3.19 to 3.17, and the cost to income ratio has gone up a little bit. But however, what we are seeing in terms of year on year, I think the NIM increased from 2.60 to 3.17 during first quarter of last financial year and first quarter of this financial year.
Okay. Mr. Mohapatra, now this is the most important question I wanted to ask you. Bank of Baroda has come with this giant deposit rate cut across the board, even in their savings deposits. What's your view? Do you have space to cut? Will it pressure margins?
Yeah, I think deposit rate cut is on the cards because we have been absorbing the pressures of deposit rate cut as a consequence of the RBI's policy rate cut, because RBI's policy rate cut, as you know, it transmits into both MCLR cut as well as deposit rate cut. But we were withstanding that pressure and we were not inconveniencing our customers. But however, some rate cut is on the cards.
What about loan growth? I mean, it was at 10.3% in this quarter. What's your guidance on loan growth for FY20? And which sector do you think loan growth will come from?
See, our loan growth, we have put it at 9% total, of which, corporate at around 10% and MSME, agri and retail all between 15 to 18%. So the first quarter is generally, a subdued quarter for the banking sector as a whole. I hope that this will pick up in the second, third and fourth quarters.
Okay. Yes, that's the hope. Just a final question. What is your current exposure to NCLT accounts and how much recovery are you penciling in for FY20?
NCLT actual exposure, I'll give you the, we have about 99 accounts with NCLT and we are expecting around between 1,200 to 1,500 crores in recovery during the current financial year.
Okay, sir. Thank you very much, Mr. Mohapatra, for joining us with details of your numbers. We are winding down on Bazaar with the note that there is a little bit of profit taking after 10 a.m. We saw the markets rise one way, but it is at the moment still can be a trending upper market. Anybody who picked up stocks in early morning trades in the first 15 minutes is still sitting in the money. The Bank Nifty continues to be the best performer, but we are seeing shades of profit taking in metal stocks. For instance, Manisha warned us that metals are not doing well. So JSW, Tata Steel, Hindalco, and to some extent L&T are the stocks in which we are seeing a bit of profit taking in Nifty. It's not 0.6 gain as we saw earlier in the morning. It's toned down to a 0.4 gain. But let's wait and see. The day is young, and you have lots of trading ideas on both sides lined up for you on Chartbusters. From Sonia, me, and the entire team at Bazaar, thank you very much for watching.